Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Moody's Analytics warns the Philippines may miss its first quarter growth target for 2025. Inflation cools further to 1.4% in April, its lowest level in over 4 years. President Marcos orders sweeping transportation reforms after a string of deadly road accidents. And in the United States, the Defense Department plans to slash the number of 4-star generals and admirals. Let's take a look at how global markets fared overnight as investors weighed a fresh round of tariff uncertainty out of the U.S. U.S. stocks closed lower Monday, with the S&P 500 snapping a 9-session winning streak, its longest in 2 decades after President Donald Trump announced a 100% tariff on foreign-made movies. Details on how that tariff would be implemented remain unclear, adding to market caution ahead of this week's Federal Reserve policy decision.
So I think the market today is mostly reflecting the big news from Warren Buffett over the weekend. We see that in Berkshire Hathaway stock, and the rest of the market is just sort of finding its footing for the week. So big news that Warren Buffett plans to step down. And as we said that we see it in the stock itself, it is a big message across the markets and across Wall Street for such an oracle to be planning an exit.
The Dow Jones Industrial Average fell 0.2%. The S&P 500 lost 0.6%, and the tech-heavy Nasdaq slipped 0.7%. Over in Europe, it was a mixed session. London's FTSE 100 gained 1.2%. Germany's DAX rose 1.1%, but France's CAC 40 lost about 0.6%. Here at home, the Philippine economy is expected to miss the government's first quarter growth target for 2025. Moody's Analytics, in its latest outlook for Asia-Pacific, forecasts Philippine GDP to expand by 5.5% from January to March, below the government's 6 to 8% target range. Still, this would be an improvement from the revised 5.3% growth in Q4 of 2024, but slower than the 5.8% recorded in the same period last year. For full year 2025, Moody sees the economy growing by 5.9%, supported by strong domestic demand, particularly private consumption. The Department of Energy issues a directive to clear campaign materials from power infrastructure, a move aimed at securing electricity supply ahead of the midterm elections. The order covers the National Grid Corporation of the Philippines, electric cooperatives, and private distribution utilities, instructing them to immediately remove unauthorized posters and structures attached to power lines and electrical facilities. This follows reports from the Commission on Elections flagging illegal campaign materials placed on power poles and wires, triggering concerns over public safety and grid stability. With businesses and election operations relying on uninterrupted power, the DOE's warning underscores a larger risk that physical obstructions on key infrastructure could disrupt not just political processes, but economic activity as well. The government unveils a bold, decade-long master plan designed to do more than just create jobs. It aims to transform the Philippine labor landscape for the next generation. The Trabaho para sa Bayan plan outlines a comprehensive strategy to tackle structural unemployment, elevate workforce competitiveness, and align talent with emerging industries. Sujin Kim has the details.
Amid the intensifying pressures of a rapidly evolving labor market, the government has officially launched the country's first 10-year national employment master plan, the Trabaho para sa Bayan Plan 2025 to 2034.
This plan also exemplifies the national government's unwavering resolve in ensuring that every Filipino has access to quality, productive, full and sustainable employment.
The plan is spearheaded by the newly formed Department of Economy, Planning and Development, or DepDev, formerly known as NEDA. According to DepDev Secretary Arsenio Balisacan, transforming the labor market can no longer be delayed.
Changes in the Philippine labor market, driven by automation, digitalization, and emerging technologies, pose new challenges to the country's employment landscape. These evolving trends underscore the urgent need for adaptive policies that foster economic growth and offer essential support to Filipino workers.
The plan seeks to address urgent issues such as skills mismatch, underemployment, and informal work. To confront these challenges, the plan outlines key strategies including expanding access to capital and scaling up skills training programs. These will be focused on the following priority sectors.
It's really the human capital development that also improves the productivity of the other factors of production. It's also human capital that produces the technology, so on. And so central to all this, to this economic development and even human capital development is really jobs.
The plan also puts special focus on improving the working environment for Gen Z.
And by 2035, the projection is that majority will now be coming from Gen Z and Gen Alpha. And, we really need to enhance or revise actually many of our work regulations in order to suit their preferences.
Under the Trabajo para sa Bayan plan, the government also aims to reduce the number of employed poor or workers who have jobs but remain in poverty. According to DepDev, this will be done through mechanisms such as social protection and in-work benefits. Sujin Kim, Bilyonaryo News Channel.
Philippine inflation eases sharply in April, dropping to its lowest level in over 4 years. The Philippine Statistics Authority reports consumer price growth slowed to 1.4% in April, down from 1.8% in March and 3.8% a year ago. The deceleration was driven by softer price increases in food and non-alcoholic beverages, including rice, vegetables, and fish. This below-target inflation print strengthens the case for further monetary easing and could impact BSP policy rates ahead of the next meeting in June. Now, April inflation, of course, out, and it's a surprise to the downside. The Philippine Consumer Price Index again slowed 1.4%, its lowest level since November of 2019. Markets are now digesting what this means for the Bangko Central's policy, the country's credit standing, and the overall growth outlook. Joining us now for a quick reaction to this is Christina Ulang, the head of research at First Metro Investment Corporation. Hi, Christina. Always good to have you with us.
Hi, good morning, Maiki. Thanks for having me.
Okay, Christina, let's start with your initial take. April inflation at 1.4%. This came in well below expectations. What was your initial reaction and what stood out the most to you in the breakdown?
Well, this is a nice beat. Very, very nice beat. Positive surprise and a big catalyst for our PCA, which is we have seen it rise recently. We have a rally, but of course corrected yesterday. And this is really very, very has positive implication also for the BSP, cutting the rates in the second half. The 25 basis points cut next June, in the next June meeting of the Monetary Board, already in the bag.
Yeah,
seems to be already in the
bag. For June, a 25 reduction in basis points already in the bag. What about for the balance of the second half? How much in total, given that inflation has been, given that we have disinflation, it's been going down every month since the start of the year. Right now, it's at a 4-year low. How does this change your expectations for the balance of rate cuts for the full year?
Well, we are living in a world filled with uncertainties coming from the U.S. tariffs. China is suffering from a very high tariff of like 145%. We are not exempted. Our negotiators are there already in Washington, hoping that we can have some accommodation. We can be accommodated for lower tariff and then greater market access. And so this is a period of maybe growth at risk. The scenario is that our GDP target of 6% could be at risk, and therefore the BSP, I think, is going to be very, very pro-growth, trying to stimulate the economy, will attempt to stimulate the economy further on top of the 25 basis point that they have done, the rate cut that we've seen last April 10, maybe another 50 basis point cut in the second half, or maximum of a 75 basis point cut on the aggressive side, just so we are able to hit the 6% GDP target for the year. Of course, there are other ways to stimulate the economy, but maybe the monetary policy can do the heavy lifting.
Yeah, the monetary policy would do that. 50 to 75 basis point cuts going to help us substantially, especially as growth expectations keep being revised lower. Moody's Analytics just pegged Q1 GDP at 5.5%, for the full year 5.9%, which is below the expectations of the government, which they want GDP within 6 to 8%. What are your thoughts for full year GDP this 2025, Christina?
Full year, we should be close to 6%. Our initial target was forecast was like 6%. But this tariff war, this trade war is actually already a trade war. Is reducing business confidence globally. Of course, the foreign direct investments could be at risk, and then taxes and growth targets may not be met. And therefore, we have revised our GDP target, GDP forecast to a little lower than 6%, 5.8% for the entire year.
Mm-hmm. It's also worth mentioning, Christina, that the low inflation we had for April, 1.4%, a lot of that is also because of weakness in the U.S. dollar, which helps support the peso. Our peso, our currency, has been doing pretty well. Can you talk to us about the balance, how weakness in the dollar means strength of the peso, and how it translates to lower inflation, just as we saw this April?
Mm-hmm. It's really one of the factors that affect our inflation, and it usually is like this. The sensitivity is like for every 10% depreciation, the currency. For every 10%, there is this correlation of like 70 basis point gain on the part of the CPI for every 10% appreciation of the currency. So it's really very favorable that the dollar is weakening and that the peso is strengthening. And it's not only the currency. We're seeing global commodity prices also collapse. Oil is down like 12%, 13% year to date. And then grains, rice, global rice prices is also down negative 20% year to date. And this backdrop of falling commodity prices are very helpful to the inflation outlook going forward. But the key worry, given that inflation is stable and decelerating, is really growth. How is this global recession warning from the IMF going to affect us? But hopefully we are least affected because our trade really is just very small. Our exports to the US is 2.8% of GDP, and our total exports to GDP is only 12% or 13% of total GDP, our exports. So we're least affected, and we have a lot of domestic drivers for GDP to achieve 5.8, 5.9% this year. Of course, household spending.
Yeah. Okay. Christina, with April inflation falling to just 1.4%, a 4-year low, is the economy flirting with deflation? Right now, we are in disinflation, which is a slowdown in the prices. We're not at the deflation point. What would bring us there?
Mm-hmm. The only deflation that we're seeing is the one of rice prices, because it's now down negative 10.9%, coming from negative 7.7% last month. So it's in the negative territory and it keeps on falling. But it's only that commodity plus corn, of course, that has seen negative growth in terms of the price movement. So there's this theory that if China goods are unable to enter the US because of the high tariffs, they may be going to markets elsewhere, like for instance ASEAN, Southeast Asian nation, including us. These products, given the huge excess capacity of China that may be created by the high tariff barriers in the US, it may force the deployment of this excess capacity to Southeast Asia, and we may see a deluge of goods coming from China into the Philippines, and that may be, in some opinion is there saying that it may be deflationary, and that is something I think government will have to work on in terms of erecting the proper barriers for this potential dumping of excess goods coming from China into Southeast Asia or into the Philippines.
Mm-hmm. Okay, Christina, in terms of asset allocation, given the low inflation and the easing bias from the BSP, where do you see the most attractive investment opportunities right now? Is it in bonds, equities, or real assets? What's your take on this?
Equities is making a resurgence because we have a combination of three factors. Number one, we have the strong peso, which we have seen in 2019 when the PISA did a triple top at 8,200 in March, and then in July it was at 8,100. So that was one strong peso. We saw that in 2019, and it's now happening today. And then low inflation also. It's 1.4 now. And it was like a 0.5, very low during that time in 2019. And then also we have growth then, but higher at 6%. So we still have decent growth now, and our corporate earnings are meeting expectation. The banks are lending very vigorously and are showing good earnings, like 9% for BPI, Metro Bank 4%, and then BDO is like 7% growth. And all of this means that the equities market is very well supported. And given the low valuation, 9 times PE, then there is a lot of room for bargain hunting and for foreigners to come in and buy Philippine equity. So that's one side of the story. But fixed income is also very attractive because interest rates are expected to fall. The BSP might cut by 50 basis points. So that's going to create upside for on the price side. And at the same time, we have this very attractive yield in the long end. The 10-year benchmark that was recently floated by the government fetched a high of like 6.3%. So it's very attractive, and given the decline in interest rates, it will improve the total return, both from the coupon side and from the price side. So you have two assets, and of course the the FX market also benefiting. Strong peso, equities markets resurgent. Foreigners are going to come in, and then a fixed income also.
Yeah, with a peso nice and attractive. Okay, Christina, lastly, what advice can you give to investors trying to navigate today's macroeconomic environment? We've got lower inflation, lackluster GDP, the BSP on an easing cycle, but external risks like tariffs are still in play very much. What's your word of advice for people navigating today's environment?
Of course, we are living in a different era. This is the era of trade war. Tariffs are not going to come back to the levels that they were before, because this is the era of Trump, and the US is trying very hard to contain China, trying to erect tariffs so that they will be able to rebalance the trade deficit that they have, very huge trade deficit that they have with the other countries, and also encourage the reshoring of manufacturing, because their manufacturing firepower and prowess has really declined and been damaged by the strength and the success story of China. So it's a different world, and I think we should take advantage of the volatility. Volatility is our friend. We will make money from the volatility of the equities market. And there are very, very good companies in the Philippines, really. Resilient banks, resilient energy companies, high dividend paying stocks, and of course REITs, not to be forgotten because of the interest rates going down. And so if you have equities, try to do your selective, high selectivity posture when it comes to equities, and then also accumulate fixed income in the long end, of course, so that you are able to lock in this very attractive 6%, 6.2% yield on your plus the price appreciation, so that the total return is further enhanced. So really, we are seeing very good opportunities in both the fixed income market and equities market.
Yeah, I love the way you frame that. We are very resilient, nationally and economically. Thank you so much for your time, Christina, the head of research of First Metro Investment.
Thank you, Maiki. Bye-bye.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are moving this morning. Right now, the Nikkei 225 is higher by 1%. Hong Kong's Hang Seng Index is in the green by about 0.5%. Shanghai's Composite higher by 0.6%. And Singapore's Straits Times Index is flat with a downward bias, lower by less than 0.1% right now. Here at home, Philippine stocks snapped a 3-day winning streak yesterday, falling by 0.8%. Monday, as investors cash in on gains ahead of the April inflation print. Now that data is out now and market participants are reacting accordingly, with expectations setting around monetary policy and growth trajectory. Investors are also tracking global cues, particularly from the U.S. Federal Reserve, and escalating trade tensions as they assess risks to equity performance moving forward. Now, with the low inflation print at 1.4% for April, we're seeing some buying action in the equities market. The PSE index is higher by 0.5% to 63.92. All shares index in the green as well, higher by 0.5% to 37.37. As for the sub indices, all are trading in the green except for the financials counter, which is flat with a very slight downward bias right now. Volume is at 170 million and value is at a little over 1 billion. We've got 80 advancers, 49 decliners, and 41 stocks unchanged. At the currency market, the peso opens weaker at 55.80 against the US dollar, lower than the previous close of 55.77. With inflation and trade uncertainties in focus, traders and investors await fresh signals to set the tone for the rest of the week. President Bongbong Marcos orders sweeping changes in the country's transport system following recent deadly vehicular accidents that have raised alarm over safety standards. In a video message posted on his official Facebook page, the president extended his sympathy to the families of the victims involved in the recent tragedies at the Subic-Clark-Tarlac Expressway toll plaza and at the Ninoy Aquino International Airport. Marcos said that he has ordered Transportation Secretary Vince Dizon to hold all parties found negligent accountable and to review safety protocols across public and private transport operations. He also tasked the Department of Labor to crack down on unsafe and exploitative practices in the transport sector, a move seen to improve working conditions for drivers and prevent further incidents.
We are taking the following actions. Review of driver licensing to ensure that only fit, capable, and responsible individuals, whether driving public or private vehicles, are allowed on our roads. A nationwide audit of bus operators with clear sanctions for those who fail to comply with safety and maintenance standards. A directive to the Department of Labor to crack down on unsafe and exploitative practices in the transport sector, because driver fatigue, long hours, and pressure to meet quotas should never put lives at risk. We owe it to the victims and their families to act, not only with sympathy, but with resolve. These lives will not be lost in vain.
Transportation Secretary Vince Dizon is moving swiftly to carry out the president's directive, launching sweeping reforms to strengthen safety standards across the country's roads and transport system. Our mobility correspondent, G. Baroga, has the details.
Ang hustisya ay para sa lahat ng Pilipino na ngayon ay takot sa ating mga kalye. Hindi lang para dun sa mga pamilya na namatayan. Kasi ngayon, people like you and me, all of us here, feel unsafe on our own roads.
That was Secretary Vince Dizon speaking after two tragic incidents just days apart. The May 1 SCTEX crash that killed 10 people and the May 4 NAIA Terminal 1 accident that claimed 2 lives, including a 5-year-old girl. During Holy Week alone, transport agencies recorded hundreds of crashes and nearly 100 drivers tested positive for illegal drugs. The DOTR already formed a road safety task force prior to these incidents, with new rules and reforms already in motion. Among them is a strict order requiring all public utility vehicle drivers to undergo mandatory drug testing.
Lahat ng PUV driver ay kailangan mag-mandatory drug test. The LTO and the LTFRB and the DOTR will be working with PDEA to implement mandatory drug testing.
Also on the list, shortening maximum bus driver shifts from 6 hours to just 4, hoping to cut down on fatigue-related accidents. As for vehicle inspections, Secretary Dizon admits many are falling through the cracks, and some licenses are being handed out with bribes and backdoors. That stops now, he says.
Similar to the mandatory drug testing, I have asked the LTO and LTFRB to come up with very strict and enforceable and regular roadworthiness checks, similar to the standards of other countries. Hindi naman tayo kailangan mag-reinvent na ng mga proseso. Nandiyan na yan eh. Tignan na natin ang mga kapitbahay natin eh, na bansa eh. Nandiyan naman yan eh. Pero ang importante doon, enforceable.
The Secretary also points out that poor enforcement is a big hurdle, so expect more enforcers and better equipment on the roads soon. Secretary Dizon also backs Senator Grace Poe's proposal to set up a Philippine Transportation Safety Board to probe transport-related accidents, and is not letting abusive drivers off the hook. Social media influencers are not exempt, like Yana Motovlog, whose license is now suspended. According to the Secretary, more are on the chopping block.
May nakita kaming i-post sa social media na nag-aabusadong driver, automatic suspendido yan, 90 days yung lisensya ninyo. Huwag ang investigasyon, ang hearing. Pag may nakita kami na may video, na may pruweba, na umaabuso kayo sa kalye, suspendido kayo. Automatic.
Meanwhile, the Solid North bus driver involved in the multi-vehicle crash at Escalating, who initially refused a drug test, has already lost his license. As for the NAIA crash, the investigation is still ongoing, but many online pointed fingers at the weak bollards that failed to stop the vehicle. According to documents, those bollards were part of an 8 million peso project from 2019 under former DOTR Secretary Oreta. Now, even that is getting a second look. On Bilyonaryo news channels On Point, Secretary Dizon shared that he and NAIA Infracorp President and Ultra Bilyonaryo Ramon Ang have already talked about replacing the failed barriers.
Nagpapasalamat tayo kay Mr. Ramon Ang kasi I asked him, sir, can we replace all of these? Because clearly, it's insufficient. No, hindi niya kayang pigilan ang mga ganitong klaseng incident. And ang sabi ni Mr. Ramon Ang, and I got confirmation today, napapalitan na nila yung mga bollards.
Aside from government agencies, Secretary Dizon is also open to collaborating with civil society groups, road safety advocates, and mobility experts to develop and implement a more comprehensive protocol for safer roads. For BNC Mobility, G. Baroga.
Former Ilocos Sur Governor Chavit Singson leads the launch of a locally assembled e-jeepney plant in Lima, Batangas, offering a lower-cost alternative amid pressure to comply with the government's PUV modernization program. The new e-jeepneys are priced at 1.2 million, far below the current market price of imported units, which range from 2.5 to 3 million pesos. The facility plans to roll out 500 units a month with the option to scale up depending on demand. Singson says local assembly lowers costs and solves one of the biggest roadblocks for drivers: after-sales support and the availability of parts. On another front, the Department of Agriculture raises palay buying prices and steps up post-harvest investments as it moves to strengthen rice supply and support local farmers amid global volatility. Under the new price scheme, the National Food Authority will buy dry palay at 23 pesos to 30 pesos per kilo, while fresh palay will be bought at 17 pesos to 23 pesos. This comes as farmers struggle with high input costs and low farm gate prices, even as the country imports record volumes of rice. To address losses from spoilage and improve storage, the DA is also planning to build 52 new rice processing centers by 2026 on top of the 150 already operating. It's also backing a proposal to triple the Rice Competitiveness Enhancement Fund to 30 billion pesos to boost farm productivity ahead of the La Niña season. Property developer Vista Land secures a $150 million loan to support expansion plans and bolster its capital base. The syndicated term loan arranged by Sumitomo Mitsui Banking Corporation's Singapore branch carries an interest rate of 6.4% per year and was secured through VLL International, a subsidiary of Vista Land. The company, which is part of the Villar family's business group, says that the funds will be used for working capital and future developments nationwide. The facility is fully guaranteed by Vista Land and key subsidiaries, including Camela Homes and Vista Residences. We're taking a short break. Business 360 will be right back. Welcome back. The midterm elections will push through on Monday, May 12th, despite misinformation circulating online. The Commission on Elections clarified that there is no change in schedule after fake posts claimed the polls were moved to May 10. Voting hours remain from 7 a.m. to 7 p.m. on May 12th. Senior citizens, persons with disabilities, and pregnant voters may cast their ballots early, starting at 5 a.m. The COMELEC also reminds the public that spreading election-related disinformation is a punishable offense under the Omnibus Election Code. COMELEC Chair George Garcia has asked President Bongbong Marcos to declare May 12th a special non-working holiday aimed at boosting voter turnout, especially among the working public. Administration-aligned candidates are set to dominate the Senate ahead of the midterm elections, widely seen as a referendum on the Marcos government's economic agenda. The latest Pulse Asia survey conducted from April 20th to the 24th shows Senator Bongo of PDP Laban leading the pack. Other strong contenders include Erwin Tulfo, Tito Soto, Bong Revilla, and Ting Lacson, all part of the administration-backed Alianza coalition. Also in the winning circle, Bato de la Rosa, Willie Revillame, Manny Pacquiao, and Bam Aquino. Senator Amy Marcos and Philip Salvador are just outside of the top 12. Pro-administration Senate could ease the passage of priority measures, including tax reforms, charter change, and infrastructure spending, with implications for business markets, and investor confidence. President Bongbong Marcos and his Alianza senatorial slate returned to Cebu after securing a crucial endorsement from One Cebu, the region's most influential political party. Cebu Governor Gwen Garcia thanked the president for prioritizing the Visayas in the initial rollout of the 20 peso per kilo rice program. She also stressed the importance of factual leadership amid today's wave of misinformation. For his part, President Marcos hailed Cebu's unity as a model for political cooperation, noting that the province's economic gains in infrastructure, tourism, and investment make it a key player in the country's recovery effort.
Bakit maganda ang pananaw ng mga investor, ng mga negosyante, mga turista? Bakit ganyan? Dahil po kayong lahat ay nagkakaisa sa ilalim ni Governor Gwen. Kayo ay nagkakaisa, tumutulong sa One Cebu.
On another front, tensions escalate between Malacanang and Vice President Sara Duterte in a word war that reflects deepening divisions within the country's political leadership ahead of the midterm elections. In a sharp response to the Vice President's recent criticisms, Press Secretary Claire Castro urged her to be more responsible with her public comments, saying that she should improve her answers and suggestions on national issues. Castro also pushed back on Sara Duterte's claim that Malacanang is politicizing the assault case involving her brother, Representative Paulo Duterte, pointing out that Davao lawmaker has publicly admitted to his mistake.
Hindi siya nag-level up. Mas parang bumaba pa. Inuulit niya muli ang kanyang mga excuses na pamumulitika kapag ka po kakampi, kaibigan, Parang gustong agad ipawalang sala at kailangang ibato ang kasalanan sa pamumulitika.
This very public spat comes as political lines are hardening, with the vice president and her allies gearing up for a possible power shift in 2028 and the administration coalition seeking to maintain control in next week's midterm vote. We're taking a quick breather. Business 360 will be right back. U.S. President Donald Trump signs an executive order to fast-track domestic drug manufacturing, a move that could reshape global pharmaceutical supply chains and trade flows. The order directs U.S. agencies to reduce regulatory approval times for new pharmaceutical facilities as the White House steps up efforts to localize production of essential medicines and ingredients. Trump says details on drug pricing and new import tariffs on pharmaceutical products will be announced in the coming weeks, a signal that policy shifts may soon follow. The administration has earlier opened national security reviews on U.S. dependence on foreign suppliers for both medicines and semiconductors, underlining its broader push for strategic industrial independence.
It's a big deal. Could have been that we wouldn't have had the problem we had.
A lot of people say that, sir.
If we had this done earlier. Thank you. Okay, go ahead.
Many actions that you've taken so far in this administration, sir, are related to onshoring manufacturing and onshoring supply chains. One of the most important supply chain issues we currently face as a country is our pharmaceutical supply chain. This is an executive order intended to promote domestic manufacturing of pharmaceuticals.
The U.S. Defense Department is undergoing a major shakeup with potential implications for global defense strategy and spending. U.S. Defense Secretary Pete Hegseth has ordered a 20% reduction in the number of 4-star generals and admirals across the military, calling it a critical step to streamline leadership and remove redundant command structures. Hegseth says the U.S. needs a more agile and tech-driven defense force, and that more generals do not necessarily mean more success. The move comes amid growing global tensions and a shift toward modern warfare, with greater emphasis on cyber defense, artificial intelligence, and space operations. Defense contractors and allies around the world are watching closely, as this could affect procurement plans and future strategic alignments. Elsewhere in the world, Peru suspends mining operations in its northern Patas district for 30 days after a deadly attack linked to illegal mining left over a dozen gold mine workers either dead or abducted. In response, the Peruvian government is deploying troops, imposing a 6 a.m. to 6 p.m. curfew and establishing a military base in the region now under a state of emergency. The violence highlights the escalating risks in Latin America's informal mining sector, with potential implications for global precious metal supply chains. While Peru is the world's third largest copper producer, most copper deposits are in the south. The north is rich in gold and silver, now facing heightened security concerns. Now, the Vatican is now set for a historic transition as all 133 cardinals eligible to vote for the next pope have arrived ahead of this week's conclave. The secret voting process begins Wednesday inside the Sistine Chapel, where cardinals under 80 will select a successor to Pope Francis, who passed away last month. This papal election carries significant global weight, with the next pontiff expected to shape the church's influence on social policy, climate change, global poverty, and its diplomatic ties in a divided world. Insiders say cardinals are debating whether to continue Francis's reformist path or elect a leader who will reassert more traditional Catholic doctrines. The conclave follows days of strategic consultations among church leaders as the world watches for signals on the future direction of the Vatican. Now, Filipino Cardinal Luis Antonio Tagle is emerging as one of the top contenders to succeed the late Pope Francis, potentially making history as the first modern-day pontiff from Asia. Tagle, who once served as Archbishop of Manila, was handpicked by Francis in 2019 to lead the Vatican's powerful evangelization office, a role that has raised his profile across the global church. In an interview with Reuters, renowned activist, priest, Father Robert Reyes, known as the Running Priest, reflected on their early years together at the Ateneo Seminary during martial law, calling it a time of quiet resistance and reflection.
So he was this very skinny boy from Imus, Cavite, and very quiet. But then if you start talking to him, he's a conversationalist. He was very good in bridging the gap between individuals and groups. He was a facilitator. Chito made a mark for himself in academics. Everybody knew that he was brilliant. And as early as that time, it was, I think prophetic that some of the professors who knew how brilliant he was saying he will become cardinal in the 70s. And when they got tired of saying he will become cardinal, from time to time, he might even become pope. Would you imagine, in his youth, he already showed an exceptional, perhaps exceptional qualities that made people think that he will go very far in the ecclesiastical ladder, and which many years later happened.
Before we go, Britain's young princes, George and Louis, briefly steal the spotlight during Monday's victory in Europe Day Parade, a historic event marking 80 years since the end of World War II in Europe. The two were caught on camera sharing a light moment, with Prince Louis mimicking older brother George's hair flick in a clip that has since gone viral. The royal family watched from the balcony as the military parade kicked off 4 days of events commemorating Nazi Germany's 1945 surrender. While a symbolic moment for Britain, these celebrations also underscore the importance of European unity and historical memory at a time of escalating tensions across that continent. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.